Today's episode of Market Talk is brought to you in part by Growmark FS. Keeping up on the latest in ag is a challenge to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic grain and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. And a good afternoon. Welcome into Market Talk for this Tuesday, August 24th. Great to have you here with us as always. I'm your host, Jesse Allen. Thanks for joining us here at markettalkag.com. That's our home on the web. You can find all of our streaming sources there, all of our social media. Everything is online at markettalkag.com. Well, we have a good day in the grains to talk about today. Soybeans led us higher with some sharp gains there. A lot of things to discuss. Let's bring in our good friend Jim McCormick with agmarket.net joining us this afternoon. And Jim, good afternoon to you, sir. And we were talking a little bit before we jumped on the air here. And really nice day in the markets on the grain side. And it was good to see, especially that soybean market really popped higher here today. Let's start there. I know there's a lot of talk about supporting bean oil and a few other things in that soy complex, the lower crop ratings as well. Talk about your thoughts on what caused that big pop in the bean market today.
I think it was kind of a trifecta. I mean, weather is definitely a problem here. It's very warm. It's dry in the eastern Corn Belt. It seems like we've kind of a flip in the weather, where the west was hot and dry this summer. The east was kind of getting the rain. Now the west is, northern plains are getting some rain. Maybe a little bit too little, too late for some of the crop. But the eastern Corn Belt, a lot of customers at Jesse are saying, hey, this crop is going backwards. We need some rain. There's not a lot of rain in the forecast. We've got humidities here, heat indexes in Chicago about 100, 105 degrees. I think 94 is a low heat index in southern Illinois, so it's hot. It's the dog days of summer. That's got some problems. That's part of it. The crude oil market's been on fire the last 48 hours, $5-6 rally, so that's bringing the bean oil market along. And then last week, we had some confusion about on Friday about the Renewable Fuel Associations, what the Biden administration was going to do with mandates. There was a headline during the trade that they were going to lower the mandate in 2021. Then after the report came out after the close on Friday, they were saying, hey, but they're going to pump it back up in 2022. But just to add to the confusion, these are all unnamed sources, Jesse. It wasn't from the EPA. They denied it. It wasn't from the Biden administration. So the fact of the matter is it's just a lot of confusion. And, you question, what was the whole story about? At the beginning of the week, the RINs were trading at $1.60. By the end of the week, they broke on a story that no one could really claim who actually to attribute it to. And now it seems like the market's kind of rebouncing back as they kind of move to the back burner, and we'll see what the Biden administration actually decides when we actually get information from the from the EPA.
Yeah, you mentioned that EPA story, and obviously that was the big one there at the end of last week. And then you talked about weather as well. And, I think that's something that I thought was interesting to notice. A couple weeks ago, we saw the crop ratings increase in Illinois by like 11 points for quarter beans. And now we've given all that back in 2-3 weeks time here. And you mentioned that weather pattern. We're seeing a little bit of a shift. I mean, the northern plains been getting rain while the faucets kind of shut off in the eastern Corn Belt. So it's almost like it's a race to the finish line here to see if we can get things to kind of wrap up here with this crop on both the corded soybean side before any more major damage is done anywhere, it seems.
Well, you said it best. It's a race, and the problem is, when we race to the end, that's not a big crop. The big crop, you want a long, drawn-out fall, warm days, cool nights, put on the test weight, fill that cob all the way out, put some big kernel depth in. That's not what we're seeing, not what we're hearing. We're hearing a lot of shallow root depth, kernel depth on these ears. And I think test weight's going to be a huge problem. A lot of corn's moved into dent a lot faster than people think. That historically is a bad sign for test weight. So I think, the reality is this crop is probably going to get smaller when it's all said and done. The question just is how quick will the government, in my mind, account for it? Will it be September, October, or will it be more toward the end of the year when we actually have harvest wrapped up? But overall, I think the supply situation is definitely going to get tighter, which is potentially very bullish in my opinion.
Well, and we look at the demand side as well. We've seen China come back in for some more soybean purchases. We've seen corn to Mexico the last couple of days. So, we're starting to get that reminder that demand is there as well. And, I look at things here as we've gone through the last couple of weeks and we've kind of corrected back and we hit some key resistance levels. And now we're trying to see where we go from here. What are your thoughts as far as marketing, in the next couple of weeks? And I know some guys and gals maybe have gotten a little complacent in this window. What would you say to them if they're looking at corn and soybean marketing right now?
What I recommend customers or producers, anybody out there right now, is look at your balance sheet, folks. I mean, I think some people would be absolutely shocked at the dollars they're looking at right now. If they actually sat down and kind of worked out their balance sheet for the year. You're looking at corn that's working back towards 550. You're looking at 1325 beans. If you're in an area that's had some pretty good weather, even if it has shaved off some of the top end of this crop, you're still looking at some phenomenal dollars per acre. So we're recommending producers take advantage of it and market it. The fact of the matter is that we haven't learned anything in the last year and a half is you can't take the market for granted. What looks like it's going to be here tomorrow could evaporate in the moment's notice. Politically, there's a lot of upheaval. The virus is still, we're dealing with it. So don't be afraid, producers. My recommendation to lock in some of these profits. And then go out and look at a May, July. There's not a lot of carry in the market. I was looking at doing some vertical call spreads on guys who are selling some phenomenally good prices out to the March, May, even July vertical call spread. Because I am optimistic on the demand side of the equation. I think the government's understating demand. A year ago, this time, they understated demand, as it turns out, by about 700 million bushels on the corn side of the equation. On the export side, I think they're doing the same thing again this year. They're understating it. We've lost 400 or 500 million bushels of production out of Brazil. There's no one there to make up for those lost bushels. I think that forces demand our way. And then look at the bean side of the equation. They adjusted the bean yield a little bit here in the August WASDE number, but they turn around and cut the demand pretty hard. If they didn't cut demand as hard as they did, our carryout would be like 15 million bushels. So the question you ask yourself is when the government lowers demand like they did is, have we actually gotten prices high enough to actually lower that demand? And I believe we have. And then to add to the volatility, look what's going on right now in the big macro picture of weather. La Nina is starting to be talked about. And if you start having La Nina problems in Brazil or Argentina, you're just going to exacerbate a potentially very bullish situation because the world is counting on them to have a big crop to kind of relieve the shortfalls in the United States. And if it starts to stumble there, where's the food going to scramble to buy? Where's the world going to buy food? Where are they going to feed all this livestock? So either you're going to buy it from us or you're going to buy it from somebody else. The problem is there's no one else. That's what's exciting and potentially bullish. But, the what if say, go ahead, take some bushels, take some premium, lock in some of these phenomenal prices, and then use options to re-own it. That's my recommendation.
Looking on the wheat side of the market here, Jim, we saw kind of a mixed bag today. Chicago KC wheat really didn't go anywhere. Spring wheat had a little bit of strength just with the fact that we know there's a short crop there. Talk about this wheat market. I know we're going to get some Stats Canada numbers out this week, and there's talk that crop's obviously going to be lower, but we haven't seen those numbers exactly yet. But just talk about your thoughts on this world supply of wheat. And how that's kind of playing into our market right now.
Right now, in the big picture, we're kind of stalling out. We've had a phenomenal run since the harvest began. So we're kind of stalling out. You mentioned today we're down a little bit on the wheat. I think a lot of that had to do with spread trades. We see a lot of that going on in kind of quiet markets. Buy the corn, sell the wheat. Buy the bean, sell the wheat. Wheat was the leader earlier. Corn hasn't gone much. So I think we saw some unwinding of that spread. But in general, the world supply continues to tighten. We know our crop is trash. The Canadian crop looks like it's in desperate, dire need. They're not going to have much of a barley crop. Now you're hearing production problems in Europe and Russia potentially, so that's getting tighter. Domestically, our stocks used 2 years ago 50%. Now we're down to 30%. So there's just not a lot of wheat. And that's where the whole situation gets very bullish potentially because it's not like, well, I'll feed wheat instead of corn. We no longer have the wheat to feed with the pricing. You're rationing the feed wheat out of the situation. Now you're going to push it back to corn. And the question is, are we going to have enough corn to feed people? And a lot of that's going to depend on how this crop analyzes. And that kind of brings us back to our first, comments. It is hot. It's dry in the eastern Midwest, and agronomists there are telling us this crop is getting smaller by the day. So it's still a very volatile situation as you go into harvest.
Very, very volatile situation for sure. It's something we'll be watching closely. You alluded to some of the geopolitical factors in some of our outside markets, and obviously crude oil has been on a sharp run here the last couple of days. as we look at those outside markets and factor that all into everything as well, is there anything specific that you really watching closely, maybe concerned about, or something you're excited about with the outside markets here as we near the end of August and how that's playing into commodities right now, Jim?
I think the thing we need to watch is the U.S. dollar. It broke out above resistance at 93 level last week, kind of gave it a nice breakout. That was negative commodities. Commodity indexes were down under pressure on that. That's part of the weakness we saw last week in all our markets. But since then, the dollar's kind of weakened. It's back below that 93 level, and that is making it look like maybe it was a bull trap. And we're going to see this dollar start to weaken. And if that would happen, that would just make it that much more bullish for us because a weaker dollar makes us more competitive on the international market. You take in with a tightening supply, it's very bullish. So what we're looking at, folks, right now is the Fed. What are the Fed going to do? Are they going to reduce that taper a little bit? That's kind of spooked the market. We have the big Jackson Hole meeting where the Fed's kind of outlay some of the longer-term policies. I think the Fed chief actually speaks on Friday. We'll see how that reacts. But the weaker the dollar is, as long as that stays below 93 and starts trending lower, I think you got to be very excited if you are a commodity buyer or bullish commodities. A weaker dollar says buy commodities, and stock market at all-time highs. Maybe that's a little bit rich, and maybe you're saying, hey, maybe I want to move some money out of the stock market to back into commodities. The weaker dollar will definitely get some of that trade's attention as well.
Let's move over to livestock, Jim, and looking at the cattle complex, and we kind of faded through the day today. We finished a little bit mixed to weaker. And there's some talk that feeders are maybe getting current finally, and that could give them some leverage with the Packers. But they're still waiting on some of that confirmation of cash trade this week. And I know we had a neutral to friendly cattle on feed report last Friday, but still kind of looking at this market here. What are your thoughts in cattle as we're moving towards midweek and maybe looking for some of that cash trade to develop?
Well, I'm hopeful the cash trade will trade higher. I mean, the box beef has been on fire, especially this time of year. There's plenty of money to pass down to the producer, so hopefully he will get it. The charts look fantastic. I mean, we consolidate after the breakout yesterday, but we had a bullish cattle feed number. The charts are broken out to the upside after a month and a half of consolidation, so I think you got to be optimistic about that. Feeder cattle, I think, is something you got to keep an eye on because I do believe if we do get a run in the grain markets, that could cause the feeder market to struggle a little bit. But like I said, you got to be a little bit optimistic on the cattle market. On the COVID front, there's some people, let's hope we're right, that think we're getting close to seeing a turn of this last wave and start to see the infections pull back. If that would happen, I think it only feeds to the bullishness of the cattle market.
And on the hog side, I've heard from a few folks, Jim, that they're a little concerned with this hog market right now and just kind of the tone that's underlying in the market. We were down a little bit today, and we've been struggling some here in this hog market lately. What's your thoughts in hogs? Are you as worried as some folks are, or do you have a different opinion there?
I'm a little bit concerned about it, but they've been more on the side of this consolidation. But the fact is, a lot of the bearishness, I think, is priced in. When you look at where the futures are compared to the cash market, either the cash market's got to go in free fall to meet the futures, which means the futures is just stagnate, or the futures will start working up. And if you look at the cattle market breaking out to the upside, if you get that cattle market to catch a run, you might see this hog start bid and say, hey, it's the cheap protein out there. And then the wild card's always China. If the dollar weakens, the Chinese all of a sudden need some protein to fill their demand. I think you got to be optimistic. The China folks have been under a massive lockdown. I mean, the United States has pretty much encouraged masking and vaccination. That is how we're dealing with the pandemic. China goes hardcore. They pretty much have locked down their country almost to the same extent certain provinces like they did a year and a half ago. So their economy really slowed down here the last few weeks. As they're opening back up, they're saying they've snuffed out this recent rebound in COVID cases. As their economy starts to open back up, I think that should be bullish to the Chinese economy. Hopefully that'll lead to some more pork demand for from the United States being sold to China. So as long as the cattle market's hanging higher, I think you got to be somewhat optimistic on the hogs.
Jim, I know you got a busy plate today. Any other final thoughts you have for us here, or anything else you want to reiterate just with our market trade here on this Tuesday?
Well, right now, I think what I just reiterate, Jesse, is to producers is go back, go to our webpage, agmarket.net, download our app. It's a great tool to run your profitability numbers. Don't be afraid to lock in profits. I mean, we like to say it's profit, not price. And the reality, the profit is there, Jesse. The profit's there for people. There's a lot of tools to maintain some ownership, but go ahead and don't be afraid to take some money off the table. It's been a great year. When you consider where we were a year ago, enjoy the profits. You made it. Enjoy the reward, and then use the options if you want to maintain some ownership on the what if Brazil stumbles.
Well, and again, that website of yours, agmarket.net, I know you guys have a lot of great info there. You have the app as well, the mobile app that folks can check out. And they can also find you guys' contact information on the website and the app if they want to reach out for some advice, can't they?
They can. Agmarket.net is the webpage.
That's the easiest place to go. With that, Jim McCormick with agmarket.net. Thanks for the time here today on Market Talk. We appreciate it, sir. Have a great rest of your week.
Thank you for having me.
Jim McCormick with agmarket.net. That's going to do it for our Tuesday, August 24th edition of Market Talk. I'm your host, Jesse Allen, wishing you and yours a great rest of your afternoon.